Hello, everyone. It's Hiley here for another episode of Credit Conversations. This is a live Q&A forum, which gives you guys who are on a chance to ask questions about all things credit. If you got problems, I think I got solutions. If you got questions, I believe I have the answers. And so it's designed to be primarily Q&A. So I look forward to that live audience. Those of you who are seeing the replay later, please take the time to join us live in the future. If you have questions, it'll just make the mix that much better. First of all, I'm gonna ask the folks that are on, just put something in the chat room that says, "Hey, I'm ready to have a credit conversation." So if you could type in the chat room for me, please. I'm not going to ask anybody to do any introductions or anything like that. But if you can put in the chat room, just say, hey, I'm ready. You said ready for a conversation. Just type in the word ready and we'll know.
I can't do it in the chat room because I'm not in the chat room. I'm on the phone, so I can't.
Oh, it won't let you connect that way? Oh, okay, gotcha. It all depends if you're using your internet or not, but that's fine. If you just did the phone in, that's okay. All right. Wait, we got somebody else coming in. Okay, we have somebody else in. And if it's okay if you guys want to mute until you're ready to talk, that's fine. That way we won't have any background noise. You can go ahead and mute. But yeah, for those just joining, we just got started. And if you're ready and you got questions, just type ready in the chat for me real quick. That'll let me know that you got questions. And then I'm going to talk a little bit about a couple of things and then open it up to you guys for questions. All right. Now, last week, I talked about the importance of cleaning up the personal credit. And there were a few reasons for that. In case you didn't see it, for those who didn't see last week, it's important because number one, you want to have as much irrelevant, incorrect, outdated information cleaned up off of your credit as possible for a couple of reasons. Number one, you're less likely to have accounts that are not yours connected to a name that's not yours if it's eliminated from your report. Now, those accounts that are not yours could come from actual errors from people, but it also could come from identity thieves and be connected to fraudulent stuff. So I indicated that not only is that good to help with your score and help clean up your report, but that can protect you from identity thieves too, because that's what they look for. They look at those variations on your account, the misspellings, and they'll grab one of those misspelled names or one of those incorrect identities, if you will, or labels, and then they'll turn it into a whole new fraudulent account. And then all the confusion with the misspellings, it'll be easier for them, especially when they got a misspelled name with an old address or an address that was never yours, and they can create a whole fraudulent identity off of you, have the mail go to one of your old addresses and using one of the misspelled names and a combination of all that, and they can take advantage of that. And before you know it, you're a victim of identity theft. So cleaning that up, cleaning that personal information up, the name, obviously you want to make sure your date of birth is correct. Your addresses, clear out old addresses going back. You should only really want to have your present address and maybe your last previous, maybe one more back, because a lot of people still carry like their parents' home if their parents are still there, because a lot of people have that, oh, no matter where I move, my mail goes there because my parents aren't going anywhere. But I advise that you keep it clean, present, current address, and previous address, and everything else you should try to clean that up. Employers are important too, because you don't want to have old employers, because again, in the confusion, they could use old and outdated information to take advantage of you. Now, today, I'm going to talk more about the actual accounts and why it's important and what you should be looking out for in terms of that. Let me ask you guys, those of you out there, if you could throw in the chat room real quick, tell me what do you think are the most important items on your accounts, on your credit report that you should make sure are correct? You know, like things like if you want to talk about the balance, your name, the account, dates, pay history, all that. Which ones do you guys think might be the most important? You can just throw it in the chat room. Or for those of you who can't access the chat room, feel free to speak up and tell me what you think.
I think the can you hear me?
Yes, I can hear you.
Oh, I'm sorry. I can't do okay, I don't want to interrupt.
No. I asked a question. Feel free, answer. What do you think as far as your credit report goes, the accounts information? What do you think the most important pieces on your accounts that in terms of having a good credit report, an accurate credit report? Which ones are most important?
For me, it is the addresses.
Okay. No, I'm talking about the actual, what we call trade lines, your actual accounts, the information on your actual accounts. What do you think is the most important? Like somebody said dates and balances. Somebody else says correct spelling of name and correct address. That's good. But what I'm talking about is on your actual accounts. Like you got a Capital One credit card, and it's got your account balance. It's got the date you open up the account. It's got the status, like whether you had any late payments, any other comments on that part. What do you think is the most important? Because like here, let me show you. I'm going to share my screen with you guys for a moment. Okay, can you guys see this credit report? Anybody that can speak can.
Yeah, I
okay,
can see
thank
it.
you. I just want to make sure. Okay, now if you see on this credit report, I talked about this is my credit report. So I couldn't find any good examples that were up to date. So I'm just using that. As you can see here on mine, the personal information is all correct. There's no variations on score. My most recent address is here. My previous addresses, and this is actually my previous and then the one before it. And actually, this was not my residential. This was a property I owned, but everything is fairly clear, clean, and up to date. But when I was talking about the account history on the actual accounts, if you see here, we got this particular account. We got things like the balances, last verified, and you want that to be fairly recent because this tells us that your creditors are reporting and keeping your information current, because you don't want to be missing anything good, and you want to make sure there's nothing bad is being missed that should be taken care of. And we got ratings, and then we got descriptions, and then we got payments, things like that. Now, to answer your question, everything you guys named was correct, but there's more. So it was sort of a trick question where I said, what do you think is important? It's all important, but I want to show you this because this is the first step when you're monitoring your credit. I want you to know what you're monitoring. You're making sure that things like the high balance should be correct, but if it's in the ballpark, there's nobody. In other words, this is where your loan started. But when the data last activity should be current. This is an early May report. This is my most recent report. And as you notice here, between the three bureaus, there's always slight differences. That's why if you guys always wonder why my scores, all three of my scores are never the same, it's because there's always variations in the report, in the accounts, because some creditors don't report to all three bureaus. So you may have a negative account that's not on one report or two reports. It may just be on one, or you might have a good report, a good account that's not showing up on the others, and so the good ones is going to boost that one higher than the ones where it's not present, and any negative ones is going to weigh down any accounts that don't, any of the bureau reports that don't reflect it. So, and then even if you have an account like this one, which reports on all three, as you can see, little things like just the dates are different across. And so those are the things that we look for when we're trying to clean up our credit, because it starts with getting things as accurate as possible. Now, some of these things, like these dates, don't necessarily affect the score, but it does tell us that if they haven't reported yet, when I look down here, as you can see, it doesn't report whether I made a good payment or not. And that's because they haven't updated. So that's one of those things you look at. It's not as important here because there's no negative history, but if it was, that's one of the things we look at for that. And more importantly, but that's sort of not that important. Here's where it's important. When you see here that it's whether it's an open or closed account, whether there's any disputes, and then whether the payment status is current here, and what you see here is current should match here. Now, this is a copy. When you look at your reports live, they have nice, pretty little green, orange, and red boxes to tell you if you're doing good or bad. So it makes it a little easier to read. I know a lot of folks like to go, like whether they're using Credit Karma or Smart Credit or any of those, they tend to look at that summary, and I'm going to show you in a minute on Smart Credit, that summary, and it's great. It's a nice tool to summarize, but it's important you do what I'm doing here and going through and looking at these individual items, and you want to be checking to make sure it's current, because if they show here on the credit report that you were late and you say, wait a minute, I wasn't late, but I call BS on that, and then that's where it starts, because you want to make sure that all that's coming. And if it says here your payment, like here, creditor type, you want to make sure that's correct, because here's a common one I see. People buy things like timeshares, and they show up as mortgages. A timeshare is not a mortgage. It's just an installment loan. It's no mortgage. It's no real estate involved with that. You're buying, what you buy with a timeshare is the right to use that property for 1 or 2 weeks a year, whatever you bought. But that's a different thing. So you want to make sure. And then late payments, anything like that, or this is last payment. So again, that's with that update. But you want to look to make sure there's no late payments. If you had one, you say, okay. If it wasn't, but the information, because remember, with the Fair Credit Reporting Act, that's the law, the set of laws that dictate how they treat us when it comes to our credit report. The very first law that everything is built on is that everything that's on your credit, all of this information must be 100% accurate and true. If it's not, we got a right to demand that they correct it or remove it. And that's the basis of what credit repair is. So you want to make sure that this information is as correct as possible, especially when it's reporting something that's hurting you from a credit standpoint. Okay, that's a mortgage. Now, when you look at something that's more like a credit card statement, which it looks a little different, because you not only do you have the balance and whether it's open or not, but these are the things that are important. The payment amount and all of that. So you want to make sure that everything is reporting as it's supposed to, and that it's accurate, even if it doesn't seem like it's major, especially if it's an account reporting any negative information. I'm sorry, I don't have anything here, but just so you know, these things, the descriptions, that's good. Now, what tends to happen is when there are negative issues, any late payments and stuff like that, they will have a line for comments. I guess it's different credit reports reported. It may say comments, it may say memo, memorandum, and it's basically telling if there's any negative things going on. All right, so with that, was there any questions before I jump off of this, or was there any questions about that information, what matters? Anything there? Let me see.
No, not for me.
Okay. Okay. So with that, and again, oh, I wasn't sure if Will said, he said, yeah. Oh, I think that was when he was saying seeing the screen. Okay. So with that being said, if you guys, let me ask you a question. Understanding that information needs to be correct, and that's foundational for having the best credit file you can have. And so the first order of business is cleaning up any of those things that are not correct, that are not right. Now, if you have past credit issues where you had late payments and things like that, as long as you're current and you stay current, late payment history will disappear over time, and it doesn't take long at all. After, say if you had a late payment in January of this year, and you had one late payment in January, and you hadn't been late since. So guess what? After 10 months, so come November, because you got to fill out complete October. So I'm sorry, December, because January you were late. It reported in February, and then from February on, and then at 12 months, that late payment is still going to show on your credit, but it won't impact your score anymore after 12 months. And then it'll only show up for an additional 12 months, and then it'll be gone. It'll be past history, because typically the credit report only shows a rolling 24 months. So when you're seeing stuff out there where people are promising to eliminate your late payments, we can only eliminate late payments when they are incorrect, right? And well, there's two ways, but we can't force them to remove any late payments unless they were reported wrong. If you got evidence, proof that you weren't late during that time when they say you were, then you can't remove it. Except we can ask them, if you got a good relationship, say you've had this account for 2 years, you've never been late, something happened, your auto pay didn't go through, or something like that, you forgot, and then you ended up with a late payment. I've advised clients to make the payment up, make sure they're current, make sure they paid the late fee if there was one assessed, so on and so forth. Then contact them and says, hey, I was calling about that late payment that I was late last month. It was a situation. You could tell them whatever. Hey, I had to loan the money to my mama, whatever. And you say, can you guys remove that 30-day late payment as a customer courtesy? If you had good history with them and they have no other reason to not give you that, they will almost always do that, as long as it was the only one. If it was the only one, at least in the last couple of years, and that's one way to get them off. Other than that, if you had late payments and they were legitimately late, you typically just got to let them age out. Now, in the case of other things, they vary in terms of what you're trying to remove. Now, if you have a collection account and it's still with the original creditor, say for instance, you had a collection with Capital One, it got delinquent, and then they closed the account, but you still had an outdated balance. But in order for them to get to that point, usually you've gone 30, 60, 90 days, And then from 91, day 91 to there, you're in collections. And then after 150 days, they usually charge it off. And it may still be with them. They haven't sold it off to a third-party collection agency yet, but you still got time. If you reach out to them, you can still make payments. Because if it was a credit card, then they just treat it like it's an installment loan. You make payments until the balance is off. If you don't get to them in time and it end up being sold to a third-party collection agency, that's one of those companies you never heard of, Jefferson Capital, Midland Credit. You say, I don't know who these people are. And that's because they sold the account. And then you got to work with them. Now, they may be willing to even settle it at a discount, but you always want to make sure when you receive anything from a collection agency that, number one, and this is something you can do, it don't cost you any money. You don't have to hire me or anybody else to do it. You can if you get a letter from a collection agency, you can call the number that they tell you to call and you say, hey, I got this letter in the mail for you guys. You're not admitting to anything. So make me no mistake. And this is regardless of what the amount of money is. And the bigger the balance, the more I suggest you do this, because otherwise you'll end up in court. But you contact them and you says, hey, I got this letter from you guys. And this is if you got the letter and they haven't reported it on your credit report yet. You can simply say, hey, I got this letter from you guys. What is this all about? And then they may try to tell you, oh, we're trying to collect on the debt. They got to stick to their little script. All you got to do is tell them this. Well, can you send me verification and validation of the debt that you say is on this letter? So give me a copy of the original contract, because on the letter, it'll tell you who the original creditor was that they say it was. So if say it was your old T-Mobile account. And so then you say, hey, can you send me a copy of that contract from T-Mobile? I don't remember this. And then I need you to send me verification that I actually had late payments and went into delinquency with this. Send me a copy of that. And then send me a copy of your assignment that says you got a right to be calling me about this when I ain't never had no account with you. It's really that simple. And when you do that, they got to send it to you. And if they can't send it to you, and you don't hear back from them, then they can't prove it. And then now you can take the next step in getting that off your credit report, because again, first law says must be 100% true and accurate. And the only way they can prove that it's true and accurate is by giving you paperwork. They can't give you no paperwork, then you can take the next step, which would be a second request. And then if you don't get it, then the third step is you can file a complaint with the Consumer Finance Protection Bureau. I know right now they under battle under Trump, but they still are operating, and that's where you can complain, and they are like the bulldog. They will go after these people to either give you what you asked for, or say, take this off the credit. And in many cases, they will sanction them for not being in compliance, because you shouldn't have to take 2-3 times to get it. They should have provided to you at the first request. And in some cases, I've had where people even got some money back as punitive damages. But we'll get to that. But you do have that. So with collections, even if it sounds like a great deal, before you give them any money, make sure you do that first. Anybody got any questions or about what I just said, or anything I need to repeat or clarify at this point? If you don't have any questions, you can throw a no in the chat.
Okay. I do. And I can't get it in the chat.
Go ahead.
So I wanted to know, is there a time frame that, like, once an old collection, I don't have credit cards at all. Praise God. Thank you, Jesus. But is there a time frame where if you have an old account that it goes into collections? Is there a time frame that it falls off of the collections, or will it always be there?
Generally speaking, a collection doesn't fall off. They won't let collections fall off by themselves, but that doesn't mean that they shouldn't fall off. And so here's the way when it comes to collections and charge-offs and when they should fall off of your credit. An account, like if it's an original, if it's, say it's your bank, your Capital One credit card, and it's still with them, but it's your account in collection status. Now, the time frame, because everybody talk about the 7-year. I'm sure all of you guys tell me who have heard about the so-called 7-year expiration. I know, caller, you said that because that's exactly what you were asking about. But for the other folks who've heard of the 7-year expiration thing, so you can just throw that in the chat if you say yes, I heard of that, or no, I haven't. And okay,
I've heard of the 7-year in the. I've heard of the
yeah, and it's important. That is a real.
But I haven't heard. But I have not heard as far as collections. I've only heard it, and that's just because I don't have credit cards. I haven't heard it as far as collections, so I don't know the rules about that.
Now keep in mind, any account, any type of account can go into collections, not just credit cards. It's any account. Any account can go to collections because so that's not just for credit cards. But here's the thing, because you have two different types of clocks. That debt, you have a credit debt clock, and then you have the collection debt clock. And essentially the way it works with your open and active accounts, when I was talking about that late payment or something like that, those only report 24 months. And then anything related to the credit clock will, if you had a late payment, it's going to fall off your credit 7 years from when the delinquency occurred, right? So that's because you always hear people talk about 7 years, but you never hear anybody say 7 years from when. That was always the thing. Go back and look at all the Instagrams and your TikToks and you see, and everybody saying it's supposed to fall off after 7 years, but nobody ever said 7 years from when. And that's the important part that people forget or miss, or doesn't get mentioned. Now, as far as collections and charge-offs go, if the debt on the original creditor, not the third-party collection agency, they booty. Then we ain't got to worry about them as far as any rights. But a collection is supposed to fall off your credit if it's been 7 years since when the delinquency began. That means when you hit that, remember, because you get that 30-day late, that 60-day late, and that 90-day late, and then day 91, you are in breach of the contract. And that's where you can slip into collections. So collections, your account can slide into collections anywhere from day 91 from the last payment you made when you went 91 days late, all the way up to 120 days. That is collections. And then generally after 120 days, day 121, then that's when they start thinking about, they say, hey, because let me explain charge-offs. What charge-off is, it's an accounting term. It basically says because a lending company, all of the loans on their portfolio, that's their inventory, that's their assets. And so lending companies pay quarterly to the IRS based on the value of their assets. Now, of course, when your account goes from account in good standing to account in bad standing, the value of that account is diminished because it's not a paying account anymore. So the irony of it is for the lenders is your value, as you get more and more behind on your account becomes less and less to them, yet they still have to continue to pay taxes on that account to the IRS. And so when they charge it off, I see some questions. I'll get to that in a second. So when they charge off your account, they've told the IRS that this account, because it happens at day 121, they haven't heard from you and they haven't received any money from you. So they tell the IRS, this account is non-performing. That's the term they use. We can't get any more money out of them. So we want to take it off of our books. So we don't want to have to pay taxes on it anymore. So that designation is called charge-off. And so they're telling the IRS they're not even trying to collect from you anymore, even when they still are. And so what they'll do is they'll charge off the account. let it sit for a while, usually at 150 days. Then that's when they'll go and sell it to a third-party collection agency. And that'll be those people that are calling you about this account. You say, I've never heard of you. I've never dealt with you. But they have supposedly either been hired as an agent to collect or actually have bought the account at a discount. And they're going to try to collect the whole money to them. So if you got a $1,000 account that went belly up, they'll probably buy it from the original creditor for $400, $300, $400, something like that. But they will still try to collect the whole $1,000 from you. And that's how they make their profit. And so here's the thing. When a lending company charges off your account, they're not supposed to be trying to get the money from you. And then what they're supposed to do, like say if they charged off your account in 2024, you should have gotten a 1099 at the beginning of January, same time you were getting your W-2s and stuff for work. And what they're supposed to do is issue you a 1099 for the amount of the debt that you owe. And then you are expected by the IRS to count that forgiven debt as income on your tax return. But see, most companies don't do that because they still want to hope that you pay them, even though legally you don't have to anymore, or they still want to have value, because if they charge it off, send you a 1099, then they have nothing to sell to the third-party collection agency. So they're trying to figure out who's going to get to them first. Are you going to reach out to them, they get their money, or is the collection agency going to grab you first and get some money from you? And so they're trying to play monkey in the middle to see how much money they got. So back to the 7-year clock, same thing. From the 7 years from when you first became delinquent, that's when the original credit should be taking it off your credit. And the credit collection agency should be like, nope, sorry, we can't touch it. But nobody's going to take it off unless we compel them to. So we ask, we say, hey, when, that's why we ask for that pay history, so we can figure out when exactly did you go delinquent. Now, a lot of people, knowing that, they would say, okay, well, I'll just wait it out. I'll wait out the 7 years. Well, the problem with that, you're certainly welcome to do that. But the problem with that is for every day that collection is on your credit report, it's constantly just basically weighing you down like an anchor until you get to a point where you end up at, you may end up at 450. Now, when it gets old enough and get close to the end, so if you're right now, if you had an account and we researched it and we found out that you became delinquent on that account, and it's been 7 years since you went delinquent, well, it's been 6 years, 7 months, and 31 days or something, or 21 days, then I would say, well, we can wait it out and say, okay, this is aged out and now go. I wouldn't necessarily entertain paying it off at that point, unless either the amount was nominal and you say, you know what, just if it's $62, pay it and get it out the way and let's get it removed from your credit. But when they are substantial, that's when you might start trying to decide, do I want to wait it out? Do I want to file bankruptcy and get it removed and count it? Do I want to try to do a negotiation with them and do a settlement? So hopefully did that answer your question, Laura?
Yes.
Okay.
Yes,
Okay.
thank you.
So
Yes.
I see here, the question says, do I need to wait until bankruptcy is discharged to remove items from my credit report? Yes, absolutely. If you are currently if you're in chapter, because of course we know there's two forms of bankruptcy. There's chapter 7 and then there's chapter 13. So if you're in chapter 7 and all the items are included, all of your negative items were included in your bankruptcy, because it's been my understanding in recent times that bankruptcy courts and bankruptcy attorneys are advocating for including everything in a bankruptcy, rather in the old days where they used to be selective about what items you wanted to include outside, but they said, because they said it's being prejudicial when you try to pick certain creditors over others that you want to include or exclude in bankruptcy. So once everything has been wiped out in bankruptcy from a debt standpoint. And then, of course, all the accounts are going to get reported a certain way based on, the fact that the loans weren't satisfied the way they were supposed to. And then once that's done and you're debt free, now we go a set about, based on how everything that still remains that's negative, how it's being reported, then that's how we set about eliminating them based on how it's being reported, because there would be a different strategy if it's being reported as still as a collection charge off, which it shouldn't be. It's no longer that. So then you start to have some choices, and you can even have choices about whether you want to have an account updated to reflect what has happened since bankruptcy or eliminated it altogether. If the amount of bad information outweighs the amount of good, you just got to be careful. And I don't want to get too involved with it. But when things like, if an account was one of your oldest accounts, the average age of all your accounts and the total age of your whole credit history all play a factor in your score. So sometimes people have tried to eliminate old negative history by getting a whole account removed, but it was their oldest account. So now their credit history went from being 27 years long, and it was one of their oldest accounts, and now it's only 18 years long, and then their credit scores suffer because you get more points with the longer your credit history is. So, but yes, the short answer is you want to wait until after bankruptcy is discharged. Then you can set about building new history, cleaning up any negative residuals left over. Of course, bankruptcy took care of the debt part. So now you got plenty of money to start, and then you want to start rebuilding credit with new accounts and things like that. And so another question says, is it best to pay off a charge off? It depends. Now I'm going to say it like this. We've got to look at it in context. If the charge off it depends on the amount. If the charge off is $200 or less, it's probably simpler and easier to pay it. But before you pay it, you still want to follow the same process. I follow the same process with every client when it comes to collections and charge off. Always get those 3 pieces of information. Get that, collection agency is, if you're talking about a charge off, okay, I forgot, I skipped a step. If there's a difference between when it's a original account of yours that's in collection and charge off status, and an account that's been sold to a third-party collection agency that's also showing collection and charge off. If it's the account that you originally had, like your Capital One or whatever, and so it's gone past 120 days, it's 150 days, it's been in collection, so, and then it got charged off, and it's still with them, like it was Capital One or Chase Bank or something like that, with credit card or installment loan. If the amount is nominal and you feel like, okay, because at the end of the day, I know there's a lot of talk on the internet where people talk about, don't pay this and don't pay that, and you don't got to pay this because the law says you don't have to pay it. Let's be for real, people. These are all, unless it's something we've found out is wrong, this is what you owe. And I'm a big advocate of paying what you owe, Pookie, in a lot of cases. Now, I know when things become substantial and if there's a way out, of course, we know bankruptcy is a way out. And I didn't talk about Chapter 13 because that was a little bit too. But the same thing, Chapter 13 is repayment. But the beauty of Chapter 13 is they don't report negative stuff. They just stop reporting altogether. But that's a different story. But if it's a charge off with the original creditor, it's in charge off status. And if the amount balance is nominal and you say, look, I got bigger fish to fry because I guarantee you any and all improvement to your credit is going to save you way more money than a couple of $100 on the loan. And that's why I try to get people to be a little less short-sighted and think about big picture. Because if the goal is to clean up your credit so that you can get approvals and then move beyond just getting approvals, but have your credit where anything you apply for, you get the best interest rate, you don't have to put no money down, things like that. You get better rates on your insurance, things like that. So the money you save in the big scheme when you've improved your credit is way better than people running around and spending 3, 4, 6 months to get off a $85 collection. To me, it just don't make sense. Now when collections are substantial, then, now we got to entertain a different budgetary thing. But it's still the same philosophy for me is, you pay what you owe. But if there's a legal way out, yes, we want to pursue it. But then you got to figure out, you understand too, that these things take time. There's a lot of back and forth. I get customers all the time, clients who feel like things are going too slow, even though I've told them from the beginning, it's a process. It's not fast and easy. I know there's people out there that tell you they're doing it in 6 days, 7 hours, 13 minutes. It's just not true. It's not true. There are some things you can get off quickly. Other things take time, especially when you're trying to dispute old debts with substantial balances. This stuff is not getting wiped away in magic like they're trying to tell you on there. I'm just being for real. But so it depends. It depends on whether you should pay it off. If it's small, I recommend just pay it off because it ain't worth the effort to go through that. If it's nominal, it's not worth paying somebody like me to get it off because it'll cost you more to pay me than what it costs for you to just pay the thing. Just keep it real. I'll take your money. Don't get me wrong. But I tell clients all the time, I said, you know what? If I'm working on other stuff anyway, then yeah, let me get a shot. But at the end of the day, when you're trying to improve, just go ahead and pay it. Just go ahead and pay it. But then you got to make sure you pay it the right way because you don't want to pay off a collection or charge off without a deletion letter. And what a deletion letter is, and you know what? I should have brought up one because I got a dispute letter queued up. I should have put up a deletion letter. But basically, the deletion letter is something you send that to the creditor, the collection agency, before you give them the money, and you say, hey, we agree on whatever the amount is, whether it's in full or negotiated discount. And it says, upon receipt of payment in the amount of whatever y'all agree on, this account is considered satisfied, and I would like to have it removed, and you will allow it to be removed from my credit report. They sign that, and you say, cool. They send it back to you. You say, cool. You give them the money, and then you say, hey, you guys going to remove it. They may tell you they will or they won't. A lot of the bigger collection agencies like RBC and LVNV, they've gotten good, and now they don't mind removing stuff, and they're gotten fairly efficient. A lot of them were promising they will, but they won't. But guess what? That's why we got the letter, because then if they don't or they take too long, we can send that letter. You can send that letter. You don't even need me for this either. You can send that letter directly to the credit bureaus that account is reporting with that letter, a copy of that letter, plus a copy of your receipt that you paid them, because the letter says upon receipt of payment. You show them receipt of payment, and the credit bureaus, you know what they do? They say, okay. They look at it and they say, okay, and they'll probably reach out to the creditor and confirm that letter. And then they'll say, okay, and then so they remove it. I've done that many, many times. And in that way, you get it swept off. And that's a lot better than just getting updated to zero. See, if you pay off a collection without a deletion letter, the best they're going to do is update the balance to zero, but it'll still say collections. Then you'd have to kind of fight with them to go back and correct it, because now it's not a collection anymore. And you need that negative information, because each one of those pieces of information that we talked about earlier, any of those that have a negative comment to them, those are like little cuts, cutting away at your credit score. And so it's not just this one account dinging your credit. It's every negative piece of information on that account that's slashing away. It's like a death by 1,000 cuts. So that's why it's important to have everything clean and no negative stuff. Okay. Next question says, is it best to pay the amount due or the minimum amount on credit cards or a little more than the minimum amount? It's always best. Now, when it comes to pay history, it's a very good question because this is another one of those things where there's kind of two levels to it because there's things that you do for your credit report, and then there's things that you do with to help your relationship with that actual creditor. And so here's that. It's always better to pay more than the minimum balance, especially if you're carrying a balance. But it's always better to pay more than the minimum balance. I recommend to get a good thing because they want to see you use your card because they make money every time you swipe it, but they don't want your balance to be too high. That's why we talk about with revolving, like credit cards, revolving accounts, credit card, line of credit. We talk about credit utilization or as a ratio. It's a ratio of whatever your balance is divided by what your credit limit is. And we want that ratio to stay below 30% maximum because you'll start getting dinged on your score if your balances exceed 30%. Now, obviously, the lower the better, but zero is not the absolute answer. Typically 10 to 15%. If you got a 10 to 15% utilization ratio and you're paying more than the minimum, you're usually going to have, first of all, you're going to have good credit scores, and because that's the best looking information you can have revolving on your credit. And your creditors are going to love you because they're happy and comfortable. They're not sweating because you got a high balance. You're paying more than the minimum, which indicates to them that your cash flow is good. You're not, because people, when they pay the minimum, that's usually an indication they might be having a cash crunch. So they're happy, the creditor is happy, and the credit bureau algorithm that calculates the score is happy. And that's how you get rising scores, by paying more than the minimum. And you might say, what's the minimum plus 10%, or if you, depending on what your balance is, if 10% of your balance is higher than the minimum, then pay the 10% of the balance. But you could always say you got a $1,000 credit card, $1,000 limit, you got a $200 balance. The payment they want you to pay is $28. If you pay 50 and your balance is not steady rising because you're using the card way too much, they'll be happy with that. And that goes a long way towards building your credit that much faster because they look to see about your responsibility. But yes, so definitely pay a little more than the minimum in most cases, a minimum plus 10%. So, okay, I was trying to see if there were any other questions. Let me scroll down. Okay. But that's that. Now, just so you know, if you ever decided to dispute yourself, let me share my screen real quick just to show you what a basic dispute letter looks like. It's nothing fancy. And so this is what it would look like. This is an actual template. So if you had this, you could create, it would just, this comes from my system. And so it just plugs in with each client, it plugs it in. But this is the part that you want to pay attention to, the verbiage about how you ask. Like this one says, I received a copy of my credit report and there are errors, and then you just point out the errors. And this is where you start. It's always better to send it to the creditor first. A lot of people tell you, to reach out to the credit bureaus first. You always want to reach out to the creditor first and get that verification, because because the biggest thing I tell folks all the time, how successful you are at fixing your credit is 99% based on documentation. If you say something shouldn't have been charged to you, or something happened. You had Spectrum and you turned in your equipment, but they charged you anyway. If you sent your equipment back through UPS, you got documentation. If you didn't keep your records, you can go to UPS. They keep everything on record. This computer age, everything is on record somewhere. So if you track down that information before you start disputing and before you start saying this, that, and the other, that's where you start. My clients that give me the documentation, that when they say this is not right, and I say, give me documentation, or they say, this should have been this, let's get the documentation. If they didn't have it, and then I instructed them on the most efficient way to track it down, they get it almost all the time. It gets done. But when they say, oh, I never looked for it, and then they say, can't we just do this? Well, what's better? Asking somebody, say, hey, can you please look into this and tell me and double check to see if it's right? And then be at the mercy of them telling you whether it is or not, or saying, look, I got paperwork that say this is wrong. Here, take a look at it. It's all right there. Now fix my credit. Now correct it. Trust me, you won't have any problems that way. So that's the thing. So I didn't go into any brass tacks, about how to dispute a particular thing, because quite frankly, I think y'all would be bored with that. But I would tell you this: it's best to have tools for that. And I know we're getting up on 7, so I want to take the time to say this, because especially completely, I am in the process now, just completing. I have worked with a developer to create a DIY credit repair platform where you can go in and it'll give you all the tools you need, the letters, everything, and you can sign up for it, and you can be able to work on your credit for free. And yes, I said for free. You will be able to do this. I'm rolling it out to some of my current clients right now, switching over to it. Now with this, it's designed to be self-help. So for some of my past people who had issues with budgetary things and fixing their credit, things like that, this is a way for them when they have those long-term credit situations. And so this way, they're not paying me a huge amount of money to do all this work for them. They can do a lot of themselves. And then they can only spot hire me for the toughest of toughest things that take the longest to get off. And even then, it's still quite a bit less expensive than hiring me to do all of it for them and then just work on the other stuff. And I'm going to share with the screen what it looks like. The platform is up and running now. And here it is. Now the name of, because this is a separate service, and it's called DIY Credit. It's hard to read it here, but it's called DIY Credit Builder by Credit Renovators. And it is it is free. All you have to do is get started. You sign up. Now, the service is free, but just like with my folks who work with me with credit repair, you have to have credit monitoring. So they use a different company than what I traditionally use, which is Smart Credit. So the only thing you have to do is pay for their credit monitoring. You don't have to pay any of these fees. Any of my clients know these fees are what are involved with traditional credit repair. With this service, this is like it. And you work through it. Now, what I am intending to do is, if folks want to have help with things and questions like this, I'm going to create a community. And that community, that way we all get together and we can help each other. I can help you, and you can help everybody else if you want with the credit. So I'm not going away completely with full service credit repair. I just wanted to provide an option, because I had many people who either didn't sign up with me because of budget issues, or people who had huge, lengthy credit history issues, and they felt that the ongoing monthly charge for paying me was challenging. So this way, it's an opportunity for them to get as little or as much help as they want. But if they certainly want to get help from me, they can always do that. But this gives them a way, and I'll be doing a full launch on it. But the site is up and running. So as the people who are not on here see the replay, if anybody's interested, you can go. The site is up and running. You can go through. It's pretty straightforward and self-help. What I may do on a future webinar is go through the enrollment process. But I think I'm going to create a whole different webinar just for these folks, because I want to build a community around this so that I can help. Instead of helping people one at a time, I can help multiple people in a more efficient way. So that's it for me. Are there any other questions? And I'm not rushing y'all to get off the phone. I'm fine. But I know, if the questions have stopped in the chat. So I was just giving everyone one last chance to if they have any questions.
I have one since I'm not in the chat.
Okay.
Sure. I'm on the phone. I wanted to ask, how do you deal, because I've dealt with this, how do you deal with when you have a company and they say you have a bank account with them and they sell your account to somebody else, and then you call, they give you the number to who they sold it to, and they say, well, we can't find an account. And then they sell it to somebody else. And then because I've called like 3 accounts, 3 people, 3 companies. They're like, we don't have it. And so I'm like, well, somebody has it. What's happening?
Okay.
Because then I go back to the original people and they say, well, we don't have it. Okay, well, did you dismiss it? Because it's showing up on my credit report. So somebody has it. So that means I owe nobody. Like I literally had this happen to me with one company, and they say, well, we don't have it. And they give me another number. They said, well, it was transferred to this company. They said, well, we don't have it. Then they transfer it to another company. So where is it?
Now, I'm assuming you're talking about where it went from the original creditor to a third-party collection agency?
It went to 3 different ones, yeah,
but
and nobody has it. They can't find it. They said, we don't have it.
Third-party collection agency. I just want to be clear on that because it's different with different entities. What usually happens, now I'm going to get to the 3 times. That's very rare, unusual. But like sometimes what happens is if someone calls about a original creditor account and they say, oh, I want to resolve this, because I often do that when somebody signed up with me for the first time and I see this collection account, I see their creditor account that's in collection status. And I say, ooh, hey, contact them, make payment arrangements with the original creditor, say it's Capital One or Chase, and make arrangements with them so that let's do that before it gets sold to collections. And you end up with another item on your credit report, drag you down more. And so what happens is they reach out to the creditor and then they find out it's been sold to a collection agency. And then I tell them, if that's the case, get the collection agency's name and number. And then they proceed to contact the collection agency. And just like you said, Laura, they said, we don't see anything in our system. My experience has been that what's happened is, for lack of a better phrase, you called too soon, because they must have just sold it. And what happens is when creditors sell delinquent accounts like that, they don't just sell them one at a time. They tend to sell them in batches. It could be hundreds of loans, could be thousands of loans, could be tens of thousands of loans. And so what happens is they all go over to the collection agency and they have to absorb those accounts and process them, get them in their system, assign a number for them.
Oh,
so
Lord,
it's
Jesus.
in this limbo. So sometimes that's what happens.
Jesus.
Now that limbo, depending on how big the original creditor was, how big the collection agency is, whether we're dealing with batches this big or batches this big, it's usually could be anywhere from 30 to 60 days before they can actually have something to look up in their system and can speak to you intelligently about what they claim you owe and what they're trying to collect on.
So when they say they can't find it, they're saying literally we don't have, I mean, we can't find it because it's in limbo.
Right, possibly. And again, that's depending on how long between when it got sold and when it got bought. And so now I've very rarely seen people have the same account. Now, what can happen is, I think what might have happened also, I don't think that second entity or the third one, I don't think it got resold again. A lot of these collection agencies are sister companies. So, for example, LVNV, which is very well known, they're pretty big. LVNV is now, it was a big company, but now it's part of a bigger company. LVNV is part of a bigger company called RBC. I keep forgetting the name because there's two of them. There's one is Regional Capital, and the other one is, I think it's Regency Capital is the one that they're under. And so you may get a letter from LVNV at first because LVNV, the subsidiary, bought the account. And then depending on what kind of account you have, some accounts, I don't know what the criteria are, but they shift them over to Regency Capital. And so then you'll get another letter from Regency Capital, but it'll say on that letter, it'll say Regency Capital, then it'll still say LVNV, and then it'll still say who the original creditor was. So it's quite possible it might have been one of those where it wasn't sold a second or third time. It just moved from one subsidiary to the other subsidiary, or one subsidiary to the other, to the parent company. So if it's the same, if it's referencing the same original account, that's how you know it's the same one. But but typically when they can't find it, it's because it's in limbo. But that's usually only in the first 30 to 60 days. After that, and you've never received, and you knew who the particular original account was on that one?
Yes, and I haven't gotten any other letters, but I was trying to resolve it. I said, let me just, because it really wasn't a big amount.
Because how did you know it got sold? Because usually people know it got sold when they get a letter from the new company. I called.
Because I got a call. I mean, I got a letter from the original debtor, the original. And then I called them, and they had actually said, they told me, they said, this account has been transferred to this company. And I said, give me the number, please, to whatever company. I don't care if it's in Peru. Just give me the number. And they gave me the number, and I called. And they said, well, we cannot find it. And so I said, what do you mean you can't find it? I got the number from the original debtor.
They said you guys
and they said, well, we don't have it.
Yeah, right? You told them they said you have it.
Yeah.
So in that case, that was most likely you called too soon. Not to say it's your fault, but you called before they could process the account. I would have followed up with them in another 30 days. Just for future reference. You want to, if you ever have that happen, you want to wait 30 days and follow up. And then usually by then, they're usually sending you something anyway, but I would always follow up with them that way. And then you go from there. Yep. But that's not that uncommon in terms of that happening. It happens more often than you think.
Well, thank you for that, because I never knew about limbo. Like, how would I know?
Gotcha.
I don't. So thank you. Thanks.
All right, guys. It's 7:10. I just want to make sure I don't want anybody to walk away feeling left out. I got one person says they appreciate all the info. It's very much needed. I just like to make sure you guys are covered. Because again, I try not to have too many remarks, because the whole idea behind this particular webinar is questions and answers. And so that people can either ask like you guys, some general questions, some specific questions, and I'm not necessarily, and I may offer something, but it's not really intended to be a sales webinar. It's intended to be a forum, a chat forum, so we can talk about these issues. Because I know when I'm just talking about credit in general, your mind can't help, right? And you guys tell me, your mind can't help wonder to everything when we talk about how does it apply to your credit, right? Where does your pieces fall in? So rather than you trying to figure out where
Right.
pieces go, I'd rather you just ask me, and then I can ask, specifically to your situation, which I think is way more helpful than just droning on and on about general credit issues. And of course, that stuff you can always look at my other videos, look at the videos anyway on YouTube. So, but I'm hoping and I didn't get too much. If you want how-tos, let me know. You can always ask me questions. I'm not a gatekeeper. If you want to know how do I do this, I will tell you exactly how it needs to be done, what you would need to do, what you would need to get done. So your questions don't need to be vague and specific. If you got a specific issue on yours and you say you don't want to just know about it, I want to tell you about it. But if you want to say, okay, that's all fine and well, but how do I fix this? What do I do? Those questions are very much on the table. And because, again, if you're asking the question, I guarantee you somebody else is asking the same question. So I'm more than happy to do this. No gatekeeping here. I'm here to give y'all the juice and give y'all the sauce on credit issues. So, I see some says, okay, be doing. You should have gotten, if you look in, Will, if you look in the email, this is every Wednesday, same time. So you're going to get the email every week. You get one on Monday. I think it's coming on Monday, Tuesday, and then you get two on Wednesday to remind you. But this is the first week we moved the time from 7 p.m., 6 p.m. So just so you know, you're in on the email list. You will be getting an email every week, because this is going to be every week until either nobody's listening, nobody cares, or something happened. I may even move the day, but from what I understand, Wednesday is the best day of the week. So hopefully more folks will gather on. I really do appreciate the questions, guys, because like I said, I think this is a lot more fun than just me droning on about the topic of my choice. And I think it's more helpful. And as the folks who are on the mailing list who are going to watch the replay, they're going to learn a lot from your questions just as much as my answers. So I want to thank you all for coming on. I hope you join next week. And now, look, y'all got a whole week to come up with some good juice. Give me some good questions. I want something good. Let's get deep in the mud. You know what I'm saying? If we, like I said, I know you might not want to tell your business, but I'm saying we all here, we all in the same business. So if you got specific issues on your credit that you want to figure out how to do, what to do, how to even get started, bring it. If you know somebody else, they got questions. If you know, and feel free to share with people, not the link, but to share with them they need to register to come on, because people got to register to be able to join on, because I only got so many spots, so I got to have that. So I want people to register.
How do they register? I don't know how they do it. How do they do that?
If you're on my email list, you already got that. If you're somebody on social media that's not on my email list, you got to register. You can go to, let me see if I can put it in here. The link, because if they see me on social media, they'll see the promo, the post in there.
No, I'm talking about people that don't.
And it has it in there.
How would they see you if they're not your friend?
Well, they don't have to be my friend. My posts are public. My posts are public, so they can see it. But I'm going 1 second. I'm going because it's kind of long. So, but basically, if they go to www, Credit LLC, but there's a slash in there, and it's slash webinar. But if they can go, that link is available on social media. They can look for me. See, they can always go to Facebook and type in my name and get on my reels. The posts are there. But yeah, it's
Oh,
Credit
okay.
Renovators
Okay.
LLC.net/webinar-credit-talk. So it's very clear that it's that. But I'm going to put it because on the recordings the chat doesn't show. So
So if I watch the replay, I'll be able to. I
look,
told you
here's what I'm going to do,
I was doing two things at once.
This is what I'm going to do real quick before we go. I pulled up a post from Facebook. So this will be in the recording. You see it right there? I highlighted it. So anybody, but see everybody.
Well, I can't see it.
Oh, okay. Well, I'm just saying it's in the replay.
Remember?
But the problem is you got to register.
Okay, got it.
You got to register to see the replay because I'm not posting the replays on YouTube anymore. You can only join this webinar and see the replays if you register, because I want everybody to come on and register, whether they come live or not. So it's in my, if they go to Facebook,
okay, got
and
it.
they look me up, there's 1,000 posts there. If they go to the Credit Renovators Facebook page as well, it's everywhere. It's not hard to find. If they go to YouTube and look at any of my videos, the links are in the chat, in the description. So it's not hard to find.
Got it.
Thank you, dear.
Got it. Thank you.
So,
Thank you.
but yeah, so I'm going to let you guys go. I appreciate you guys taking some time to do this, to join this and help me to help other people. And we will see you guys next week.
All right.
Take care. Have a good night, everybody.